following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Thursday morning here in the U.S., and hope you guys are doing well. We're going to immediately jump into crude oil and the XLE again. We've been kind of hawking this for a while, and yesterday, in fact, we talked about, the breakouts happened, the technical damage has happened for the shorts. We talked about not being able to, hopefully go short this thing anymore and start looking at it from nibbling from the long side. And we wanted to pull back into support. We got that yesterday, a little bit of an overshoot. I'm trying to hang in there no matter what happens with the XLE relative to this crude oil trade. It's a little bit safer situation. And I was poking around, just reading the latest rags and what they have to say about, their fundamental theories on all these types of things that seemingly, in a very high percentage way, always seem to be wrong. But I was looking at an article that actually started turning my stomach about getting long the XLE in a big way for a while. Not that crude oil in my mind is going to go back to the 70, 80, 90, $100 a barrel levels. Obviously, there was a big supply report that came out yesterday, and it said it was the most in a roundabout way, said it was the most oversupply we've had in 80 years. I know they've been tracking crude oil supplies that long, but the article was saying that put your grandmother's life savings into buying oil-related instruments right now, and that one as a contrarian type indicator that really shook me. But anyway, that being said, I guess that was just one person's article and view. But here we go. This is the most important thing in crude oil right now, this 48-78 area, and we need to stay above there. And we don't have to stay above there, but I'm trying to play this instrument from that side. Now, if you've been following the show, the XLE, actually, I read some articles also that were, not just the crazy put your grandmother's life savings into it type scenario. Some people were saying some things that we had been talking about on the show about, here's the XLE. Even though we haven't had the violent move up in this thing lately, we've had a very moderated, boring trade up, which if you watch this, so I love that term boring when it comes to trading. Boring is good. Boring is good. And that 74.18 area that we closed back above and stayed above and bounced off a couple of times, so our crude oil was still kind of banging around the 45, 44 area. We reached some targets yesterday. We talked about 80.07, and that's going to be the little bit of a lid for a while. And that was kind of all we were hoping for. But here's the daily on the XLE. You got this 77.15 here is kind of the pullback. And as you've noticed, on a relative scale, that crude oil instrument has pulled back to that 48.70. Was it 48.79? 40. I think that was to the tick, what I just said while ago, crude oil. But as you can see, the XLE continues to show a relative strength setup, and not even coming back to that breakout area on the profiles on the dailies as we were looking at the crude oil trade on the dailies. And let me just pull that back up just to restate what that number is. Within 5 minutes, I seemingly forgot about what that was. Okay, 48.78. There it is. All right, so you see, how crude oil is kind of having these, more violent moves. XLE, not so much, and also the relative strength of the move up in the XLE on these pullbacks relative to crude oil has been just kind of nice to watch. Actually, just kind of proof of concept, if you will. So that's been a very interesting situation. And we want to try to take advantage of anomalies when we see those things. So while we're talking on that level, let's pull up our scanner, and let's pull up the XLE. And as you can see, this is the S&P 500 breadth, and wow, we're still positive on the weekly and the daily, and that's just amazing in the face of quite a few things that happened yesterday, namely this Greek freakout little situation with the ECB. Shrugged it off, got things straightened out, and we're back in business on the long side on the S&Ps, and we're looking for reaching targets and finding support based on this breadth calculation. Okay, so we're going to get rid of everything on the screen, and we're going to go to the XLE, and we're going to look at some individual instruments that may be interesting for you guys to take a look at. Anadarko, we looked at that a couple of weeks ago, and APC, we got a really good bounce off that, about a 15% bounce as we were looking at oil stocks to try to trade from the long side within the XLE. But we've got them all up in the XLE right now, and what we're doing, I'm just gazing across this grid here, and as I can plainly tell you, from a daily breakout standpoint, we've got some really, this is basically showing me that most of the XLE stocks are cooperating, some are not. I'm not a big fan of shorting any oil stock right now, so I'm not looking for the weakness. And we looked at Kinder Morgan yesterday. National Oil Well, NOV, this one definitely is looking sick as I don't know what. I can say that confidently because of these red squares here. And let's just pull up NOV just to kind of give you an idea how this works, and then we can kind of move into some plays off of the scanner. NOV. Ouchie. Yeah. Here's the weekly situation, and as you can see, relative to crude oil, this thing has actually underperformed it. Trend 52.33, pre-market about that same. Here's the daily situation, and we obviously got a little bit of a move up, and then a pretty violent move back down, and can't even hold the bottom of our profiles. And as you can see, oil is not making lower lows, and this thing's making lower lows, and this is something you don't want to try to nibble on. This thing is not on sale, in my opinion, and you've got better things to spend your time and risk capital on. Another thing too, getting into trades like this that don't exactly jive with the process of relative strength trading and finding things that are utilizing fair auctions that we try to rely on in our methodology, it'll wear you out. And spending a lot of mental capital on situations like that, just from a trading standpoint, I know you guys have been in the game for a while who are listening to this show, it's just not worth the mental capital, and you'd rather spend your mental capital on something else. So on the other hand, let's take a look at some things that are looking extremely ripe. TSO, let's just kind of bring that up. TSO, and here we go. This, I'll be honest with you, is this even an oil stock? let me verify that. Hold on. And I'm blindly pulling these off of the scanner this morning. TSO. Let me see. This might have been mislabeled. I'm just doing a little research really quick. Yeah. Wow. Well, this has been on the scanner for a while, and I'm actually shocked. What is this? Okay. A little bit different situation here. It's in the Spider XLE. Wow, this has been something to hang your hat on for the long side. Support on this 8201. I'm going to leave this alone because this is not one of the traditional plays. Let me figure out what. Apologize, guys. Pull up our scanner one more time. Let me get this off of got a couple of things going on here. Apologize. Here we go. Let's take a look at a couple of others. And we're going to look at Exxon. As you can see, Exxon with the flashing sign over there, 60-minute, still above profiles here. Within profiles on our weekly, but let's just pull this up. Exxon Mobil, obviously, a lot of people are in this trade. Yeah, Chapman, I'm listening to you. I did not have that on my radar screen. I just kind of blindly pulled it off the scanner, and I really am shocked that I wasn't aware of that. But I see you are, and that's because you're such a student of this stuff continuously, and why wouldn't I know that you had already had that on your radar screen? All right, 89.49 weekly on for lows. Here we go. 91.46 as of yesterday's close, and let me pull this up here. Have really, this has been something, I talked about a bounce or two before on Exxon. This has kind of been the rocker arm. Obviously, this thing's held up relative to crude oil, making lower lows during the same time frame that we kind of not wanted to make lower lows. So just that fact alone, I think you've got a decent lid down below to sum up the long-term view for investors. 89.49, you can orient stops around, and I know that's been kind of a stop-out situation here, but remember, it's these things can go to hell in a handbasket really quick. Any stock can, and at some point, some shifts in ExxonMobil internally from some kind of admin standpoint could have caused this thing to go lower. You never know. But 89.49, the premise always is, from what we talk about, not necessarily from an investor standpoint all the time, it's lose a little, lose a little, lose a little, make a lot. So that was one of those stop-out situations where you just keep turning the wrench the same way. And right now, that's still where the stops, in my opinion, need to be oriented. Here's the daily. Again, you had some coincidental information down there around the same time frames. 89.50 on fair highs on the daily, and that number on the weekly was 89.49. So got a nice dual time frame confluence there, and again, that's kind of still the way I'm looking at ExxonMobil. We're trading 92.06 pre-market here. And I'm mixed up on my screens here today. I apologize. Let's get this back up. All right, one more before we go to break. We're going to take a look at Valero. VLO. Wait for this to populate. Okay, so started showing some strength here on this one. 49.68 still going to be unfair highs on the weekly that I'm going to be able to orient stops around below, and I like this sector from the long side, and therefore this is one of the stronger stocks in the sector. It started showing its strength a lot earlier in the game, but we want to talk about what do you do now, and we'll talk about that a little bit when we get back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And we were finishing up with Valero. This has been one that kind of showed its hand a little early. And we had the breakout on the dailies above 46.19, and I know this is telling you things after the fact. We talked about this a little bit as it closed and was one of the stronger stocks a couple of weeks ago, above 49.68 to really get confirmation that it was okay to move north here. But what do you do now? We got an orange bar trying to appear on the daily. That means we're more than likely going to get a new supply area up there. And right now, 240s yesterday kind of ramped up and crowded up against the top of that box on the 240s. This is all in the scanner, all baked in the cake. I'm laughing because I actually have 10 chickens here in North Carolina, and they're outside screaming, and it sounds like a bunch of old hens, and it's cracking me up. So here we go. Welcome to North Carolina. As we looked at Valero, we've got these numbers here, the 49.67, the new box attempting to appear. These are all things that are notification areas in the scanner to, if you're looking at Valero, you really don't need the charts. So that's the take on Valero. It's kind of a wait and see because of this orange bar on the daily right now, and just wait for some new inflection points to appear, and you'll get those in the scanner. And we're going to move forward here. XLF. This has been one of I think the leverage is on the short side with this thing. We've been talking about that. We're up at 23.81 pre-market right now, and not a pretty situation. The rate environment may change to benefit these guys, but right now it's just, I think you've got better things to look at from the long side. I think the long side, I just blocked this out right now. I'm still looking to nibble on the short side, and here's that 23.79. Excuse me. 23.67 on the XLF, and that on the daily. God, I'm all mixed up here this morning. 23.79. I think that's 23.70. Yeah, 23.79 on the daily. So those two inflection points you got to pay attention to. Plus, you've got a new profile that's appeared yesterday and in force, and that lid is pretty much right there. And we bounced off of there at the close yesterday. So not a big fan of going long the XLF. And I think we've got a caller. And Don, are you there from Odessa, Florida? Hey, no problem. I hope you're doing well today. Great. Yeah. Well, I'm glad something sparked your interest. Wow. Yeah. Well, people, thanks for calling in about that. I hope you're getting some other uses out of the show than me interjecting comments about my chickens here. On Intel, okay. You bought some puts on Intel, you said? Okay. Yeah, let's take a look at. You know what, Don? While I'm talking about this, can you call back? Because I think your connection, you got a really bad echo, and maybe you can call right back into the show and they can put you on a different line. Yeah, I think it's okay. Yeah, call right back. Yeah, okay. So as Don's calling back, we're going to take a look at Intel, and he bought some 30 puts, and this is the deal on Intel. As we look at this, and we're going to go back in time. Oh, I've got 300 days back, so we're not going to look at everything past 300 days back. But as we look at this, 3230 is our kind of Maginot line on the bottom of our weeklies here, and obviously we're. Don, are you back with us? Wow, still a bad. Okay, and I'll okay. Wow. Are you guys hearing that? Maybe Don's ghost is still with us. We're gonna go to break, guys, and when we come back, maybe we'll have all this sorted out. We'll talk about Intel, Don, and solve some more problems.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And Don was on with us before, and we were trying to take a look at Intel. And Don, since you're not on with us still, and maybe you're in the den somewhere in a dark crack that I don't know about in the den, that I don't think you're in there, because I haven't heard any comments from you before in there. But if you can get in there, maybe, because we had some phone difficulties before. I don't know when you bought the puts. If you bought the puts before the announcement, and we're looking at Intel before this kind of earnings related situation, and you're thinking about taking them off, now's probably not the worst time in the world. 3305 unfair lows, new demand area on the daily profiles, and you've got this 3230 sitting down here also. You're still within a fair auction. Anything could go when it comes to this stock right now, but the fact of the matter is, even looking at the situation with the earnings incorporated into this, we're still kind of in a major long-term uptrend, and we've had a decent pullback. And if you have on those puts, you might have some wishful thinking at this stage for this to head lower, considering some of the headwinds that I just spoke of on the downside. So, and if you bought them recently, as in the last day or two, I think you could, we got some support down here, put it that way. And we were talking about chickens earlier. We're going to probably not talk about that too much more. And the phone issue is fixed. TFNN's telling me that right now. So if you guys want to call in and have a look at anything else collectively together, we can do that now, is what they're telling me. Chickens are funny creatures of habit, for sure. I could tell you some funny stories when you guys want to hear some. So I love coming back here. Let's take a look at the euro. We took a look at the dollar yesterday, and let's just take a look at that first, because this was kind of the first sign. Dollar's got a new profile attempting to appear, new supply area up top on the weekly. If we still have this orange bar by the end of the week, we're going to have some new inflection points. But what do you do now? That's always the question. And the question yesterday was, what do you do? Yesterday morning, we were right in here, right on the support. We got a really good bounce. Seems like the European Union and Greece and all these guys are trying to sell this out. But the fact of the matter is 93.67 is still supporting the dollar. And coincidentally, we were looking at the euro in an inverse relationship off of that 144.47 area. We got a little bit of pullback off of that. When we got back down below, we can't seem to get through that, and this is somewhat coincidental to the dollar staying up. So again, stops oriented on the euro around 114.47, rounded off. And somebody's asking to hear some chicken stories. I mean, they're such creatures of habit. I'll just tell you this. They've got different roosts that they'll go on. If you take one of the roosts down, they'll jump up to the invisible roost. If they're so geared. It's amazing. Oh, I hear you. They're and by the way, if you like eggs, that's the way to go. And eggs get a bad rap. I hate to go off on a tangent here, but it's a great complete food. And this cholesterol scare, I actually don't think that's, with the Atkins diet and all that kind of stuff going on now. And if you listen to the health show that's on TFNN, you'll kind of get a whiff of a lot of that concept. But man, I mean, this, it's an easy, it's a fun little pet, and you actually get something out of it. So they're interesting little critters, to say the least. We got to take a look at the S&Ps. God, you threw me off there talking about chickens. Here we go. Had some price action rattling around yesterday for sure. And we reached a low yesterday at the end of that little tranche, about 2023. And this morning, reached the low of 2021. So that 2027 area we talked about for a while, 2052 up top, and then 1988 down below has really been, that's been the levels, so to speak, that I've been focusing on to try to trade around. It's been super volatile. You had to be quick lately. I know you guys don't need to hear this from me. It's something you probably already experienced. But taking a look at this, when you go back in time and take a look at what the S&Ps are, kind of stepping back. And one of the things, I'm not doing some heavy trading right now. So it's a little easier for me to objectively look at things. And that's another thing. A lot of times, when you get, I put money on the Super Bowl just like everybody else and their brother probably in the United States did, or maybe I'm just thinking everybody likes to put money on the Super Bowl like I do. But why do people do that? It's just makes the game more interesting. And but in doing that, you feel yourself during the game. You feel yourself, hinging a little more mentally and psychologically on different plays that were going on. And that game, was a roller coaster ride. But in trading, if you're over leveraged, this is the analogy I was trying to make. If you're over leveraged and the market's bouncing around pretty hard, it's hard to make sometimes a very objective decision. Because it's mentally disturbing a lot of times to look at some of these things go against you. And do I take a stop? Is it going to go back my way? And and those objective decisions, like a Basil or a Steve Rhodes or somebody else is constantly making, stepping back and just looking at the facts. It's sometimes it's hard to follow. So my suggestion at times like this are just to trade a little bit lighter. If you've gotten kicked around lately, you cannot tell yourself you're going to make it back in one, trading day or in 1 week. I mean, this is kind of an odds probabilities game. And, again, the worst thing you could do probably in volatile times, and I'm thinking worst case scenario, some guys out there may have gotten beat up a little bit in this volatility. Take a day off, take a break, trade a little lighter, get your head back together. And I've been there, and you don't want to go the other way. You don't want to get aggressive in times like this if you've been getting beaten up. So, but starting to get off on that tangent again. Here we go. Stepping back, we're actually making lower highs and higher lows in this kind of compression mode. And yesterday I was talking to Tom in the afternoon on his show, and we're always, trying to figure out where's the broad market going, where's the leverage. And crude oil kind of had this set up around 100, if you remember. This is our daily. Crude oil is actually doing it kind of on the weekly and the daily. But then we had a major move. And on crude oil, it was obviously down. But this is the same type mousetrap. I mean, we've kind of been compressing here for a while. And it's weird that we're compressing, and actually at the same time, weirdly, the volatility is getting higher. But this is usually the sign of a possible breakout one way or the other. Now, this may unfold a little more, and that means we're going to kind of tighten up, and then come to a somewhat of a point possibly. But where's the leverage right now? I hear Don is back. Don, are you back?
Hey, John, I am back.
Okay, great.
You know what? It's still there.
Yeah, I hear it.
Listen, I heard what you said about Intel. I bought that yesterday, I think about 10 cents, something like that. It's a February 30 call.
Okay.
So I'll hang up and listen to you if you want to say any more about it.
Okay, great. Thank you.
Bye-bye.
Thanks, Don. I guess he bought the Intel puts yesterday, and my quick answer on that is, you've probably got better things to possibly put some capital towards. You got some headwinds on the bottom around that 32 area as far as support areas, and obviously the 30 puts are below there, and that's I might actually just kind of chalk that one up as, if you're looking for an opinion, chalk that one up as just, hey, didn't work out immediately, let's move on. But taking a look at the S&Ps, the reason I pulled up the scanner again is, our breadth is positive here, and you guys should have access to the admin version of this. And we've got those paragraphs going in and actual charts that show the levels, real-time charts by the weekend. But as we look at these S&P breadth charts, we looked at them yesterday. Hate to beat a dead horse, but blowing these up, this is our weekly view. We crossed over about the 17th of October, and we still didn't cross over as of last Friday, and we're breadth positive. And that means that the larger percentage of the S&P 500 stocks are trading above profiles, and therefore, as insane as this has sounded at times, you've got to be looking to buy support. Now, on the intermediate time frame, there's been trading opportunities against the long-term trend up. And that's one of the cool things about this is it's a really nice guiding light in certain times. I mean, we've had some trading opportunities, sell-offs January 12th to January 20th, 21st, and we've crossed back breadth positive recently, February 2nd. And I know this has just been a rattling experience, and I've talked to a lot of people about these breadth figures on the intermediate and the weekly flip-flopping around and no clear direction. And from a trading standpoint, it's been just, crazy. But the long-term leverage is still with the investor. And that means that, the guys who are holding long-term instruments relative to the S&P stocks and instruments still haven't had, and we've gotten down into this. Let me pull up this weekly here. We've gotten down in this 1968 area a couple of times with Brett still hanging in there. That means we're going to it's still going to be okay to buy these long-term inflection points with stops oriented below. And if breadth turns negative and then we get a close below these long-term inflection points, then the long-term investor will not have the leverage anymore. Dang it, how did that happen? All right, so, what do we do now? 2052 is a major inflection point. I can't, I don't see a lot of reasons to trade from the long side into that 52 area. It would be better to just wait and see, and if we close above, then use it as support for moving higher. Here's the 240-minute situation. As you can see, this has just been crazy, even on this time frame for the past, for the whole month of January, basically, into February. And right now you've got 240 support at 2036.60. You've got a lid at 2052. And right now, even though the breadth is positive, there's a major level at 2052. And if we get above there, that's going to be, in my opinion, okay to get back in the water on the long side again. If you caught a good move up from 1970, that general area, that's great. But 27 has been a big number, 2052. And right now, I'm just sitting tight with this, as we had talked about yesterday. Just catch up with some notes here. Yeah, we'll talk about chickens again after the break. KFC is a huge deal in Asia. They're everywhere, and people line up like it's literally amazing. Almost a forgotten situation in the U.S. You know what else is big there? Shakey's Pizza. Remember that chain? Like 20 years ago? They're like all over the place. It's crazy. It's like they reinvented themselves over there. Anyway, we got to take a look at. Pull this up here. I don't know what happened to Shakey's. Somebody was asking me. It's like it's like they went off the face of the earth over here, but they're not off the face of the earth in Asia. Trust me. Let's see. Here we go. Okay, Japanese yen. This is still, again, guys, don't sell this thing. It's 116.67, 68. That's the support area. Orient stops around it, and don't look at it. That's kind of my take on the yen. People have been asking me about this. Yeah, it's somebody's mentioned about KFC again. It's like the cat's meow over there. It's like, and I've actually started seriously liking KFC again. It's like they make it differently. I don't know what they do. Maybe they don't put it in pressure cookers. I have no idea. But as we look across the board here, we're going to pull up beans because we were all over this short from 1050. And I finally got that little bounce 2 days ago. Stopped me out. I was trying to leverage again off of 972 because that's what we're supposed to do. And then the next leverage point was the top of the box there at 998.5. And as you can see, we reached 999 and then came off. So this is kind of proof of concept a lot. Pick a battle, didn't work out. Got another chance to pick a battle, dual, like unfair lows, unfair highs. And we made some decent points off of that. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hey guys, welcome back to the show. Here's that situation on the bean trade. As we were looking at March beans on the scanner. And we're within profiles, and we've got a new profile that's appeared on beans, as you can tell. We'll pull this back up. 981.40. If you can hear these chickens, that's one of the there's a lot of cool little sayings that were derived out of dealing with chickens, acting like a bunch of old hens. When they're upset, they're just yelling. And chickens coming home to roost. Such creatures of habit. It's amazing. And a lot of value you get out of those guys. And it's amazing, to me, after you kind of start playing around with them in a hobby fashion or whatever, man, they just don't deserve to be cramped up in a chicken house or in a egg laying factory for a year or two. And they've got personality, and they're really cool little guys. So if you never experienced them, it's a very low maintenance pet that you'll get something out of. All right, we got to take a look at gold. This has been a pain in the butt here. around the 1267. Obviously, it's just revolved around it. And we talked yesterday about sitting tight with this thing and trying to go long above 1267 and opting out on the shorts. Still a big fan of that, and you may want to give yourself a little bit of room here. But again, we've had some closes above 1267 recently. We've seemingly had a lot of closes below 1267, but targets were taken off around the 1300 neighborhood, and that's just the way this thing goes. And what do you do now? Excuse me. I think you got at this stage probably sit on the sidelines a little bit for gold, and if you're going to be extremely interested in being in the trade, you've got to be in the long trade above 1267, and that's just the way it goes. Give yourself probably some generous stop areas on this and trade a little lighter, because the major move's been made in gold for right now. Okay. Something else we've been looking at, the XLV. Been a big fan of trying to hang with this from the long side, but right now that trade's to some degree over for me for a while. 69.42, and we closed below there yesterday, and we're sitting right below 69.34 for highs on the weekly. So right now this is kind of started to break down a little bit lower, and I'm really stingy on this trade. But getting back above the 69.5 area is going to be like as it was the day before yesterday. It's just been relatively volatile with the volatility of the market. Again, I'm just going to try to orient stops around this area. For me, that's going to be pretty tight, and see if this thing can develop a little bit higher as we get closes above on XLV. Okay, just reading some comments there. All right, we're going to take a look at Apple, because this thing's breached the 120 area now. And even though we talked about this, even though we're crowding up into a major inflection point in the weekly, I think a lot of people get some value out of this. This is not the type of action you want to see from the short side. And if the market pops at all, well, for starters, Apple getting back above all-time highs and closing above all-time highs are going to bring the market up by default, because as you know, the NASDAQ, I think at this stage, is almost 14% of our Apple's 14% of the NASDAQ. So at this stage, you're not looking to sell that inflection point. You're looking to keep buying Apple. And the 240s here, the support is 119.25. Thanks, guys. Steve Rhodes is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.